In this video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar plus investor sentiment. And then basically the technicals overall, we're reaching a critical point. So potentially a bounce from there. And at the same time, from the inflation data points that came out last week for CPI and PPI inflation data, the numbers came in showing that inflation is actually decreasing. So the Fed did state a bunch of times, that they don't want to reduce the interest rate due to their expectations that the current administration will cause inflation to rise. But at the same time, we do have the tariffs in the mix. President Trump did delay the tariffs for some countries for 90 days. There's that development. And at the same time, there's a potential that Apple products essentially will not be taxed through tariffs kind of thing. Imports from China and all that stuff potentially exempted technically, because I'm seeing headlines that potentially that is not the case, but some that are saying that is the case. We'll see, but you could expect the markets to go up. At the same time, just like the markets did go up with a 90-day pause, they started trickling down right after. So it's not a guarantee if that is the case. So I'll get to the technicals first. Basically, investor sentiment. The sentiment has increased on the bullish side as of lately for the week of April 9th to 28.5% versus historical average of 37.5%, but it increased nonetheless from the previous week of 21.8%. Then the bear sentiment has slightly decreased from the previous week, so 58.9% versus the previous week 61.9%, still higher than historical average at 31%. In terms of economic calendar, nothing really major heavy hitters for this week, but I'll go over them nonetheless. Monday, April 14th, we have Philadelphia Fed President Harker speaks, Atlanta Fed President Bostic speaks. Then on Tuesday, April 15th, we have import price index minus fuel, Empire State Manufacturing Survey. And then Wednesday, April 16th, we have US retail sales minus autos, industrial production, capacity utilization, business inventories, home builder confidence index, Cleveland Fed President Hammack speaks. And on Thursday, April 17th, we have initial jobless claims, housing starts, building permits, Philadelphia Fed manufacturing survey. And on Friday, April 18th, we have San Francisco Fed President Mary Daly speak. So there's that. Now, in terms of technicals, the reason I'm stating that there's technically a level that we're reaching at technically critical is if you look at the S&P 500. So I'm looking at ETF, specifically ETF SPY, ETF for the S&P 500, same thing, just different ratio. I've shown this before in the past in my channel. Basically, there's a channel dating back since 2010. We have an upward trend resistance line dating back since 2010, upward trend support level dating back since 2010, and then a lower for major crashes. So far, it's only 2 touch points. So technically, this is not legitimate yet, but 2 major crash touch points dating back since 2010. Question is, will we get to that point? Now, we are already in the mid zone right now. And technically, at the same time, we could still go lower and touch the 200-day moving average on the 5-year chart. So the 200-day moving average is looking at $466. And right now we're at $533. So, but at the same time, we're within the zone of we could bounce, like we've seen before, bounce right about here. And you could argue that it was the moving averages, but it was not the case. It went even lower than moving averages. So this does hold true. And coincidentally, for example, if we look at the 1-year chart, this MACD line indicates if we're in a bearish or bullish movement. Yes, in a bearish movement for the time being, but it looks like it's trying to reverse to the upside. And if I zoom out, technically, now my lines are not perfect, so it could have essentially fully bounced off this upward trend support level, or maybe we have more room to grow to the downside, but it looks like it's a potential reversal to the upside. Plus, if the Apple news is actually legitimate, then technically we could actually expect some kind of bounce up to the upside, potentially. 5-year chart as well, bearish movement, mind you, but it's potentially could be curving up to the upside. We see an increased volume coming in, predominantly more on the buy side as well. And then the alt chart is the one that's indicating further downside. Now that's where potentially, are we going to go and bounce off, for example, the 200-day moving average of the 5-year chart, just to make sure it was a 5-year chart. Yeah, 5-year chart. And then the alt chart 50-day moving average, which is at $464. So basically around 400, let's say with quick drops, $460. Will that provide us a good bounce or support level to bounce off of potential? But in essence, even with these, for example, tariff delay news and all stuff, ultimately the downside could still be coming regardless, right? There's just some updates, but then nonetheless, overall movement is to the downside for the time being. But we'll see. I'll keep you guys posted. We do have major headwinds, for example, in terms of moving averages to combat on the way up. So on the 1-year chart, you have $574, $585, and $573. The 574 is for the 50-day moving average. The 585 is for the 100-day moving average, and the 573 is for the 200-day moving average. But the 573, 574 right about here, that's obviously going to be an issue, especially we saw horizontally right about here cause an issue. But that was mainly due to moving average for the most part. There is some horizontal movement there too as well. Actually, you can see it bounce off of support and resistance. So horizontally, resistance, and then support right about here. So that clearly will be some kind of 570 something will be an issue. But we got way to go from there. Now, in terms of NASDAQ, looking at ETF QQQ, ETF for NASDAQ, same thing, just different ratio. It paints the same picture with MACD lines. It looks identical, actually. So here's the MACD for 1 year chart, and it's about to cross over to a bullish movement, potentially upside. I'm going to go over the lines in terms of support and resistance as well, but basically MACD line as well, bearish movement, 5 year chart, volume increase, more on the buy side as well, and then potentially cross over the bullish movement. But then just like the S&P, all chart, potentially for the most part, the all chart showing further down the line that ultimately the movement is technically to the downside, but we'll have to wait and see for future developments. Now, I've shown this before in my channel, where it was the upward trend resistance line and upward trend support level dating back since 2010. Did break through since 2020 to 2022, came back underneath, and we're pretty much within the zone right here. We had a couple false breakouts, but ultimately kept us of restraint to the upside, like we've seen here. Basically, had issues passing through, regardless, nonetheless. But yeah, question is, are we heading lower? Are we going to go up higher? This one's a little bit tricky, but it is within the 100-day moving average, and it's a couple times did bounce, but then broke through dramatically. And then ultimately, if we're heading down, are we heading down just like the S&P with, like, for example, the 200-day moving average of the 5 year chart? Potentially. Right now, the QQQ ETF for NASDAQ is sitting at $454, and the 200-day moving average is $383.45. So we still have more room to go to the downside, but we'll see for the time being. But again, for the most part, it looks like the 1 year and 5 year potentially is showing to bounce to the upside, potentially. We'll have to wait and see for that development. And in case you're curious, the all chart 50-day moving average could be a good indication of where we could be heading down to. The bounce off is $381 as well. Now, to terms of the Dow Jones, paints the same picture with the 1 year, 5 year. So 1 year potentially crossing over to a bullish, potentially upside. A couple of levels we bounced off of as well. 5 year chart, same thing, paints the same picture, bearish, but potentially going up to the upside. And then the all chart ultimately further downside, potentially, unless some development does happen. But if we look at the 1 year chart right about here, there are some levels I've marked off of, and this was before this whole entire level. So now we've actually bounced off this level prior, where we saw support level as well and resistance at times too. And we basically started bouncing up. And then the question is, are we going to head up fully? But the thing is, though, in my opinion, I would assume this level, so it dates back since 2021, caused resistance a couple times, If I zoom in, there's even more than just, like, for example, here, you could clearly see there was 2 touch points. If I zoom in, you can see further touch points, bounce off support, all that stuff, et cetera, et cetera. So we will probably see some resistance. Mind you, Dow Jones closed at 40,212 points. You can expect resistance roughly about the 41,400 points, let's say, give or take. And then plus you have the moving averages to combat, which is the 200-day moving average is at 42,189 points, and then the 50-day moving average is 42,551 points, and the 100-day moving average is at 43,101 points. So do have resistance on the upside. It's not all clear yet for the time being. We'll have to wait and see, basically. But in essence, there could be a reversal to the upside potentially, or it could be just a small hiccup bounce, especially if you're looking at the alt chart and essentially it's still pointing to further downside nonetheless to come. Mind you, the delay of the tariffs is 90 days, so I'm expecting something to happen once we get closer to 90 days as well of the pause for some countries, right? It's not a pause for all countries, it's only some countries. So I would expect some kind of pull down nonetheless leading up to it as well. But that's just my opinion. I'm not a professional, so please do your own due diligence and research before buying and selling. Thanks again for watching. If you found it beneficial, consider dropping a like, it helps out the channel. And if you made it this far, consider following and subscribing. I appreciate the support. Thanks so much again. Take care for now. God bless and peace.